Imagine waking up tomorrow with zero. Not in your bank account, not in your wallet, but in your financial life. No credit score, no credit history, no proof you ever existed in the U.S. banking system. Just a social security number, a lease you barely got, and a debit card that does nothing to help your future. You walk into a Wells Fargo or Chase bank. You ask for a credit card. The banker gives you a secured card application with a $39 yearly fee, a $200 limit, and a 29% interest rate. You take it because you think this is what everyone needs to start building credit. You are wrong. That card is not a starting point. It is a fee for being desperate. The expensive truth still being told in 2026 is, you need to carry a balance and pay interest to build credit. You need to start with fees. You need to struggle for 2 years before the system trusts you. This is stress disguised as advice. The constant worry of checking Credit Karma at 2 a.m., watching your score go up a points a month, wondering if you will ever qualify for an apartment without a cosigner. This is not poverty. You are eating. You are surviving. You are not getting ahead. There is no money. In America, having extra money is everything. Let me tell you about something that people usually don't discuss at gatherings. Having an income of $50,000 and a credit score of 750 can actually go further than earning $90,000 with no credit history. Think about that for a moment. Banks trust the FICO scoring system more than they trust your salary. Your credit score plays a role in determining how much you pay for things like electricity deposits or car loans. For example, it can mean the difference between paying a $500 security deposit for electricity or just $50. It also affects your car loan interest rate, which could be 4% or 14%. Over a 5-year period, that difference is huge. It's not a few $100s, it's actually the down payment on your first home. So if I had to start from scratch today, I wouldn't rush to get credit cards. I wouldn't try to accumulate points and miles like some online experts suggest. Instead, I would follow a plan with just 3 credit cards. Each card would serve a purpose, helping me improve my credit score. The first card would help me stop making financial decisions. The second card would give me opportunities. The third card would help me achieve term financial goals. I'd like to walk you through this plan step by step so you can make the most of your credit. Avoid wasting time or hard inquiries. Card 1. The Discover It Secured Months 1 to 8. Month 1. I walk past Credit 1 offers that look like Capital One. Have an extra digit in their name that seems like a trick. I ignore store cards at Target and Best Buy that promise 20% off. Have low limits and high fees. I go to the Discover It Secured card. Here is why this matters. Most secured cards are deals. They take your $200 deposit, give you a $200 credit limit, and charge you $35 to $99 every year just to use the card. They never let you upgrade to a card. You are stuck in the past while the world moves on. Discover works differently. They give you 2% cash on gas and restaurants. That's real money while you are building credit. They also match your cash back at the end of the year. The key is the upgrade. If you pay on time for 7 months, not a year, not 2 years. 7. Discover returns your deposit and changes your card to a regular card. They increase your credit limit without asking for money. This is the start of something. This is when you get into the credit system. The plan is simple. Use this card for 2 things: gas and groceries. Don't use than 30% of your $200 or $500 limit. But here is a trick that can add 40 points to your credit score away. Pay it every week, not every month, every week. The FICO system checks what you owe on your statement date. If you pay every Friday, your statement shows a 0 balance. You are showing the system that you're responsible and don't use your card too much rather than desperate and maxed out. This is the difference between a 680 score and a 720 score in 6 months. Now you hit a problem. Your credit score is 680/700. You feel pretty good about it. You go to a Chase Bank branch. Apply for the Sapphire Preferred card because you want lounge access and a fancy metal card. They say no. They make an inquiry, which drops your score by a few points. This hurts your credit report for 2 years. You just made a mistake that keeps you from getting the best credit cards in America. Chase has a rule. If you have opened 5 or more credit cards in the 24 months, they won't give you their premium cards. This rule applies to all their stuff, like the Sapphire card, business cards, and even mortgage perks. You miss out on all these benefits. If I were starting over, I would apply for the Chase Freedom Flex or Freedom Unlimited card at month 12. These cards are like a door to getting better Chase cards. They don't have a fee and offer 5% cashback in rotating categories. Importantly, they help you build a relationship with Chase before you hit their 524 rule. This way you can get the Sapphire Reserve card 2 years later when you really need its travel benefits. Card 2, the Chase Bridge, years 1 to 2. I use my Chase card to pay for things like utilities. This includes my phone bill and my internet bill. I also use it to pay for Netflix. I set up all of these subscriptions to automatically pay from this card. Then I set the card to automatically pay the balance from my checking account. I do not care about showing off how much I spend. I want to show that I can make my payments on time. This is what the bank's computer system likes to see. When I make payments on my Chase card for 12 months, the bank starts to see me in a different way. After a year of doing this, I go from being someone they do not know much about to being a customer they like to work with. Card 3, the Amex Gold, month 18. Month 18, your score hits 720. Now I will make a move. The American Express Gold, not because I need the points, not because I want the metal card, because I need the leverage. Amex is generous with credit limit increases. They backdate your history, which helps your account age. They offer pay over time features that protect your utilization ratio in emergencies. Yes, the $250 annual fee sounds bad to someone who just started. Here is the simple math. The dining credits and Uber credits if you live in a city and eat food make that fee almost $30. The 4x points on groceries and dining is not a perk. It is a protection from rising prices. You now have the 3 cards. Discover for a credit history and proof you graduated. Chase for the mortgage, approval power, and the best travel benefits. Amex for credit limits and the prestige that lowers your insurance rates. 3 cards, no more. The last part is the AZEO method, which means all 0 except 1. I am going to use the AZEO method to keep my Discover and Chase credit cards at 0 balance every month. The only card that will have a balance is the Amex card. It will be a very small balance, between 1% and 9% of the limit, on the Amex card. This will make the FICO model think that I am using my credit cards in a way and that I am actually using them. The AZEO method is going to help my credit score go up by 15 to 20 points in one cycle of the AZEO method. Here is the lesson. Starting over is not about collecting plastic. It is about stopping the predatory fees, then opening the doors to homeownership with the credit, then building the ceiling so high with the credit that you never worry about a $500 car repair again. You stop being the insomniac who is always refreshing Credit Karma to check the credit. You become the wealth builder who understands that in America the credit is not debt, the credit is optionality, the credit is the margin that keeps you breathing. You need to protect the credit, grow the credit, and you are not just surviving the system, you are quietly winning with the credit.